morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're just covering some financial results. Of course, Christmas is in the air, as mentioned, and can be a distracting time for some in terms of focusing on the money, but we keep our focus on it nonetheless. So let's take a look at some financial results which would have been published over the past couple of weeks and what investors might expect ahead. And of course, we're talking about one of the big boys on the Trinidad and Tobago Stock Exchange, Republic Financial Holdings, this week. And they would have released their fiscal results for 2024 and delivered an earnings per share figure of $12.29, which was a very commendable increase of 14.8% from that $10.71 recorded in the prior comparable period, that is fiscal 23. Net interest income would have driven a lot of this performance, up 8.6% from $4.66 billion to just over that $5 billion mark, $5.06 billion to be exact. Operating income up also 7.1% from $6.69 billion to $7.16 billion. And ultimately, net profit attributable to equity holders crossing that hollowed $2 billion mark, up 14.6% from $1.75 billion in that prior comparable period. So certainly good reading for Republic shareholders at this particular point in time. And a lot of that, as mentioned, was driven by increases in operating income, which is always a good factor of sustainable growth over subsequent periods. Net interest income, as mentioned, up that 8.6% from $4.664 billion to over the $5 billion mark in that pinkish segment. Other income also increased to roughly 3.5% from $2.02 billion to just about $2.1 billion as well. And as we can see over those past four fiscal periods, there has been an upward and consistent upward trend rather of growth for RFHL's operating income. So again, good reading for investors in RFHL or potential investors in RFHL. When we take a look at Republic's profit before tax by geographical segment, certainly good news as well. Trinidad and Tobago growing rather year on year, roughly 32% from $2.4 billion to just about $3.2 billion before eliminations. Guyana also growing around 35% in that greenish segment from $290 million in that prior comparable period of fiscal 2023 to $392 million in the fiscal 2024 period, with stability roughly across most of the other operating segments, with the exception of Barbados, which declined roughly 80% or 78% in fact, to $215 million from just over that $1 billion mark in the absence of non-recurring gains, which would have really inflated that earnings figure in that fiscal 2023 period. Now, for investors and potential investors, when we take a look at the earnings per share or the earnings trend of Republic stock, we can see that again, consistent with its earnings overall, there has been a nice and upward trend in terms of basic earnings per share delivered by the group, growing from that $8.05 in fiscal 2021 to that $12.25 level in fiscal 2024. Now, commensurate with that or not commensurate with that has been an upward improvement in stock prices, as has been the case for most of the stocks listed on the Trinidad and Tobago Stock Exchange since around that 2022 calendar period. And that has resulted in the Republic's earnings or price to earnings ratio rather declining consistently from 16.9 times to a fairly attractive level of, well, not fairly, an absolutely attractive level of 9.2 times currently, which does make it quite a compelling investment for would-be investors as well as in existing shareholders who might want to average on or increase their holdings in Republic Financial Holdings Limited. So at a price of $113, Republic is trading at a price to earnings ratio, as mentioned, of 9.2 times, still below the sector average of around 10.2 times, the banking sector that is, and offers investors a quite attractive dividend yield of 5%, which is just above that sector average of 4.7%. So with those higher revenue trends and earnings growth in mind, continued geographical diversification, and those relatively attractive dividends, Bourse is maintaining its overweight rating on Republic Financial Holdings Limited for the time being. Turning quickly to Unilever Caribbean Limited or UCL, for the 9-month period ended September 2024, the group would have reported an earnings per share figure of 74 cents, which was a quite impressive 45% increase from the 51 cents per share recorded in that prior comparable period. Now, driving this growth was more cost management, but revenues were still up a fairly modest 3% from $168 million to $173 million, which is a reasonably good achievement in the context of a fairly sanguine economic environment and economic activity at this particular point in time. Gross profits up that 6.8% from 74.5 million to 79.6 million, with operating profits ultimately up that 34% from 20.7 million to 27.9 million. Restructuring costs no longer a factor in UCL's earnings going forward. Ultimately, profit for the period up from that 18.3 million to 19.4 million. Again, a 46% odd increase. So good reading for UCL. For UCL shareholders after a couple of years of, well, as we can see in the subsequent graph, somewhat volatile revenue trends. Now, that revenue trend seems to have stabilized somewhat. And as at the 9-month period, as mentioned, it would have increased 3% compared to a 14.6% decline year over year in that prior comparable period of 9 months 2023. So again, some positive trends emerging or starting to emerge in terms of revenue stabilization and hopefully a platform for growth in terms of revenues for UCL going forward. Now, in terms of the profitability margins, well, a much better story here. Gross profit margins improved over the past 2 comparable periods from 43.3% in that 9-month 2022 consistently to that 46% level. And the operating profit and profit before tax margins also increasing materially from 12.2% and 12.3% to just around that 16 to 16.5% level, respectively. Now, what does that mean for shareholders or investors? That means that UCL is able to convert more of its revenues generated into profits for its shareholders. So certainly positive development for UCL. So at a price of $11.18, UCL is trading at that price earnings ratio of 12.7 times, which is above the sector average of 9.5 times. However, offers investors a quite attractive dividend yield of 5.6% compared to the 4.7% sector average. So with that increasing revenues in mind, though it being modest at this particular point in time, but those improved profitability margins and that attractive dividend yield, Bourse is maintaining an overweight rating on UCL for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2BORSE or 226-8773. Email us at invest@boursefinancial.com. And of course, you can check out all our research absolutely free on our website at bourseinvestment.com. So we'll see you next time on the Bourse Report. Until then, stay safe. Happy investing and enjoy the Christmas season. Take care. We'll see you again.